Hi, I'm Keon, a Senior Research Analyst with Lipper, and I'm here to speak to you about fund flows activity for the week ended Wednesday, August 14th. Let's start this week's report by taking a quick look at the market activity. Markets tanked on the last trading day of the week, driven downward by recession fears. Investors headed for the exit as the 2-year, 10-year Treasury spread temporarily inverted in intraday trading. The inversion of this spread is considered a reliable predictor of a recession within the near future, usually starting within 1 to 2 years. The last time the spread inverted was June 2007, which was shortly before the global financial crisis. Shorter-term maturity notes are highly sensitive to the Federal Reserve's interest rate policy, while longer-term maturities are impacted more by inflation and economic data. The yield on the 10-year Treasury tanked this week due to the heightened concerns over a global economic slowdown, which was brought on by the escalation of the U.S.-China trade war and the protests in Hong Kong. The Dow, the Nasdaq, and the S&P 500 all retreated approximately 3% on the day the yield curve inverted. And for the week, they closed the fund flows trading week down 2%, 1.1%, and 1.3% respectively. Let's turn our focus back now to fund flows. We'll start by looking at the weekly results for each of our fund macro groups. For the week, equity mutual funds suffered net outflows of $4.6 billion. Taxable and muni bond funds each took in about $1.5 billion, while money market funds had the largest net inflow for the week at $10.6 billion. We'll now explore the changes in each one of these asset groups more closely, starting with the equity mutual fund group. The $4.6 billion net negative flow for the group was its 26th straight weekly net outflow. Domestic equity products were responsible for all the net outflows as they had $4.9 billion leave their coffers, while non-domestic equity took in about $221 million in net new money. Diversified equity funds accounted for most of the net outflows among the domestic group as they had $3.1 billion leave, while the emerging market funds peer group took in the most net new money on the global side with about $222 million coming in. Let's move our attention now to the equity ETF group. This asset group took in roughly $7.7 billion in net new money for the week, with the largest individual net inflows belonging to the SPDR S&P 500 ETF and Invesco QQQ Trust 1, which took in $5.9 billion and $2.9 billion respectively. On the flip side, the SPDR Select Sector Financial Fund saw $1.2 billion leave. We'll turn our attention now to taxable bond funds, starting with the mutual fund side of the ledger. This group had net inflows of $1.5 billion for the week, its 8th net inflow in the last 9 weeks. 2 intermediate investment-grade debt peer groups, Core Plus bond funds and core bond funds, paced the net inflows at $1.5 billion and $980 million. We'll take a look now at the taxable bond ETFs. This group also took in net new money, about $4.3 billion. The largest individual net inflows belong to the iShares iBoxx Dollar High Yield Corporate Bond ETF and the iShares 7 to 10-year Treasury Bond ETF, which had positive net flows of $839 million and $555 million respectively. The largest net outflow belonged to the iShares iBoxx Dollar Investment Grade Corporate Bond ETF, which saw roughly $585 million leave. Let's turn our attention now to the Muni Bond Fund Group, which extended their run of weekly net inflows to 32. This asset group had positive net inflows of $1.5 billion for the week. The net inflows were once again concentrated within the national muni peer groups, with general muni debt funds and high-yield muni debt funds leading the way with net inflows of roughly $374 million and $362 million respectively. Our last group to take a look at is money market funds. Money markets had positive net inflows of $10.6 billion for the week, with the largest contributors to these net inflows being the institutional U.S. government money market funds and U.S. government money market funds peer groups, which had net inflows of $9 billion and $2.1 billion respectively. That wraps up this week's report. If you'd like to take a closer look at the data for yourself, please go to our website at www.lipperusfundflows.com. And please join us here again next week, where another one of our analysts will be speaking about the week's fund flows activity.